Hi, everyone. Welcome to today's session hosted by Innovations for Poverty Action. Today, we'll be talking about what does it really cost to use financial services. So we'll give you a brief overview of Innovations for Poverty Action and the background for this topic. So we've done a study, or we're currently in the process of working on a study on this topic, and we'll walk you through the background on that study. And then we'll have kind of like an interactive component where we'll work with you on one of the methods that we use for this project. And you'll be able to think about how you would do your own research design for this. And then we'll have Xavier Giné talk about some practical case studies on this topic. Next slide, please. Okay, so quickly to give you some background about who we are, Innovations for Poverty Action is a research and policy nonprofit. We've been in operations for about 20 years now, and our goal is to create and share evidence. And with this evidence, we inform better programs and policies, which we hope will lead to a world with less poverty. We do a lot of different types of research and work across different sectors, including health, education, peace and recovery, and financial inclusion. Next slide, please. So we've conducted over 900 evaluations around the world using tested and rigorous methods of evaluation. Our primary approach is through randomized control trials, a methodology you may be familiar with as it was recognized by a Nobel 2 years ago. But we do use other rigorous evaluation methods like survey work, A/B testing, and market research. Next slide. Okay, our HQ is in Washington, D.C., but we actually have 22 country offices around the world and have worked in over 50 countries. We work with a team of scientific researchers and economists that are based all over the world and have more than 700 government, nonprofit, private sector, and international partners. All of our partners help us deliver our programs and services, and I'll drop a link to our website in the chat, and you can review that later if you'd like. Next slide. Okay, and then with this, I'd like to introduce my colleague, William Blackmon, to kick us off.
Excellent. Thank you, Tanvi. Just confirming you can hear me.
Yes, we can hear you great.
Excellent. Great. Well, thank you, Tanvi, and thanks to BRAC for putting this together. As Tanvi mentioned, I'm going to talk through a study that's currently ongoing, conducted by IPA, and then walk us through an interactive session where we can talk about how mystery shopping might be useful to you and the organizations that you work for. And then I'll turn it over to Javi to talk about some work that has already been done on mystery shopping. So I want to start off by sort of starting from a broad point and making the case that measuring the true cost of digital financial services is both important and not a trivial undertaking. We know that digital financial services can help to reduce poverty and improve consumer welfare. There's been a lot of strong research on this that has shown experimentally that digital financial services have these benefits, for example, through expanding the geographic scope of consumers' social safety nets that they can take advantage of in times of financial shock. They also allow consumers to migrate to urban centers that may have better employment opportunities while continuing to support their families in rural areas. There's other mechanisms, but I think it is well known that digital financial services have these poverty alleviating benefits. However, we also know that cost is a critical barrier to uptake and usage of digital financial services. We know that consumers are quite price sensitive when it comes to mobile money and similar services. The graph that you see on the right is from Rwanda, and some of you may know Rwanda made mobile money fees zero cost, zero rated these fees right as the COVID-19 lockdowns came into effect. And so what we see here is a dramatic increase in the value and the volume of mobile money transactions right as this zero fee policy was implemented. Now, of course, this is not causal evidence. A lot was changing at this time in early 2020, as the pandemic began. But I think this is quite suggestive, that cost certainly plays a role in consumers' decision to use mobile money, and so we know that the cost is important. However, we also know that understanding the true cost of using mobile money is difficult, because the official price that you may find for conducting mobile money transactions by going on providers' websites, for example, is not really equal to the true cost that consumers face. As just one example, we ran a study in Uganda in 2020, asking DFS consumers about the types of challenges that they experience when using these services. And we found, among other things, that nearly a third of the consumers that we spoke with said that agent overcharging was a recent concern that they had experienced. And so, these extra costs are one of many other types of costs beyond the official prices that consumers need to pay. So despite the importance of cost in determining both the usage of mobile money, the true cost of using these services are not to date measured in any really systematic way. One example, the graph on the right, shows work by IPA, where we collected and analyzed official fees. And this has been done by others beyond IPA. But this work is restricted to only the official fees, the fees that are available on providers' websites. And we know that these miss out on important components of the total cost of using these services. So one component beyond the official fees is potential overcharging by agents, as I mentioned before. But we also know that there's a broad category that we call non-monetary costs that are quite important. So beyond the fees that you pay, official and unofficial, there can be things such as long queuing times, particularly in urban areas, failed transactions. If a transaction is unsuccessful at an agent, either because of liquidity constraints of the agent or network issues or something else, this can harm consumers because their funds are temporarily unavailable, and if they have an urgent need, an emergency, then not being able to access their funds is a serious issue. There's also a range of consumer protection failures that can occur beyond overcharging by agents, lack of pricing transparency, lack of privacy or security, potential harassment, other agent misconduct, fraud. These are all potential costs that consumers incur beyond the monetary costs of using these transactions. So these all directly hurt consumers and also reduce trust in digital financial services, which then can further erode usage. So there have been individual studies that have explored these issues, and Javi is going to talk about some of these at the end. But there is no global measure of costs that have been developed and applied across multiple countries. And so this is the gap that our current study is aiming to fill. IPA is creating what we're calling the Transaction Cost Index, or TCI, to systematically measure costs, monetary costs and non-monetary costs of using digital financial services. We hope that this index can eventually be deployed across a broad set of countries, but we're starting off our sort of piloting work in Bangladesh as well as in Tanzania and Uganda. Once this work is complete, the TCI will make data collected about true costs publicly available for free to anyone that wants to look at it. And we really hope that this can be useful for a broad range of stakeholders. Researchers should be able to use this data to explore issues, for example, around the drivers of digital financial service costs. Governments can take advantage of this to identify where their supervision and enforcement activities should be focused. And similarly, DFS providers themselves can use this data to identify areas where their agents may not be following internal rules and regulations. So starting off, what will we measure? What is our focus? And I've talked about this a fair amount already, so I can move relatively quickly through this. We are focused on understanding the total cost of using digital financial services, monetary and non-monetary costs. We are also focused on measuring the costs of using digital financial services specifically with agents. We focus on transactions that are conducted with agents because it's these interactions with agents that typically can lead to high rates of unofficial fees and non-monetary costs as compared to transactions that you carry out on your own, self-serve transactions carried out on your own device, where overcharging is less likely to be an issue. So as I mentioned, monetary costs, we can break this into both the official fees that are collected by the providers themselves, plus any government taxes, versus extra unofficial fees carried out, charged by agents directly for completing the transactions. And then non-monetary costs include issues such as failed transactions, long queuing times, lack of pricing transparency, consumer protection issues, discrimination, harassment, lack of privacy, security, those sorts of issues. So here is, I think, the methodology bit, and I think this is quite, the most interesting part for me. Our goal here is to develop the most cost-effective method for collecting data on cost of digital financial services. And so we are both interested in capturing the true costs, but also finding a method that's relatively inexpensive, so it can be scaled to a larger set of countries and carried out on a periodic basis. So we are exploring specifically 3 different methods for collecting true cost information. The first one we call mystery shopping visits by trained professionals. So in this method, enumerators employed by Innovations for Poverty Action will be trained to carry out real transactions with agents using real mobile money accounts. Everything is an actual transaction. But agents will be, enumerators will be trained to carefully record outcomes of those visits, such as whether the transaction was successfully completed and what the fees were paid immediately after completing the visit. Importantly, we won't be disclosing to the agents that we are researchers carrying out research, hence the mysteriousness of mystery shopping. The second approach will be similar in that it is still mystery shopping visits, the same types of scenarios, the same basic approach, but instead of using enumerators employed by Innovations for Poverty Action, we will recruit local consumers to carry out these mystery shopping visits. There's 2 potential benefits to doing this. We can potentially save money. There's costs associated with enumerators, travel time, their salaries, that sort of things that could be saved if we focus on using local shoppers that are already in the locations that we're interested in measuring costs at. These local consumers are also less likely to raise suspicion from agents, and so it may be logistically easier in some ways to use local shoppers. And then finally, we'll also test out a simple, straightforward survey of local DFS consumers. And so we will position our own enumerators just outside of agent locations and ask local consumers that are leaving the agent locations after completing a transaction if we can meet with them to conduct a brief survey. So then we'll ask them basically the same questions that mystery shoppers filled in. You know, was your transaction that you just attempted successful? What fees did you pay? But we will ask them about the transaction that they had just completed sort of on their own. This is potentially less logistically complex than mystery shopping, but we as researchers have less control because we can't train the local consumers in advance, and we're not able to set the types of transactions that the consumers carry out. It's whatever they carried out sort of naturally. So beyond the sort of overall measure of cost of using digital financial services, our study is also interested in exploring differences in experiences, differences in prices and costs incurred by various consumer segments. And specifically, we're focused on three different segments. The first is rural versus urban consumers. We might have an expectation that rural consumers face higher costs, both because there may be less competition between agents, and also agent viability may be more difficult in rural areas. And so prices sort of have to be higher to accommodate that. This is our prior, but we will look at the data to truly understand this better. We're also looking at any potential gender discrimination by comparing experience of female and male mystery shoppers. We can directly measure any of this, any potential gender discrimination by agents. And then finally, we will send consumers both to agents that they use regularly and to agents that they have never used before. And this will allow us to understand if agents are systematically treating new customers different than their regular customers, perhaps charging higher fees to new customers because agents consider these to be sort of one-off transactions. So we have these three methods that we're interested in exploring. And as I mentioned before, our goal is to determine the very best method for collecting these real costs. There are pros and cons of each method along a number of dimensions. So it's interesting to sort of think through these. Our expectation, though again, we'll have more to say about this once our study is complete, is that mystery shopping will be more expensive than consumer surveys. But that mystery shopping by local consumers may save money relative to professional mystery shopping because of the travel expenses that I mentioned before. In terms of adaptability, we consider mystery shopping, both professional and local mystery shopping, to be better than consumer intercept surveys because we as researchers can control exactly what mystery shopping visit scenarios are carried out. In terms of data quality, our expectation is that professional mystery shoppers are going to have the least errors in their data because we can extensively train our own enumerators that are employed by us. We expect local mystery shoppers to be sort of in the middle because they will receive a brief training in the field, but that they'll receive less training than professional shoppers. And then consumer intercept surveys, we expect potentially to have fairly significant issues in terms of data quality because of issues related to recall with this group, because we'll do no training before the transactions are carried out. Observer bias or Hawthorne effects basically refers to agents modifying their behavior because they know that they're being observed. They know that they're being observed by researchers. So potentially reducing their rate of misconduct or overcharging. Professional mystery shoppers, from our piloting experience that we've done so far, professional mystery shoppers tend to really stand out more than local shoppers. They're often coming, from the capital city. They may it may be the first time that they're in particularly like rural areas that we're working. So we should expect that some visits will not really be completely mysterious, and that hot and effects may be largest with this professional mystery shopping group. Local consumer mystery shopping and consumer intercept surveys should suffer less from this potential bias. And then finally, consumer surveys have an advantage in that they reflect the real world decisions consumers make about which agents they use. For example, perhaps consumers know to avoid some agents because they have been overcharged by them in the past. We are not assigning consumers to agents when we conduct mystery shopping surveys. Consumers are making their own decisions about which agents to visit. And so these consumer decisions are taken into account when using consumer intercept surveys to measure costs, whereas they're not when looking at mystery shopping. So that's an overview of the transaction cost index project, which we're midway through, and we're quite excited to be getting started with, and look forward to sharing more results as we get them. I want to transition now into a more interactive session. If you all have access to the poll everywhere system that we started off with, this is the time to use it. So what we're going to focus on is basically how you go about designing a mystery shopping study. And so what we're going to cover is really three main components that you need to think about as you prepare a mystery shopping study. First, determining what your policy objectives are for this mystery shopping study, and then selecting which products, channels, and scenarios you want to include in your mystery shopping visits, and then finally designing your consumer profiles. So what we'll do for each of these questions is I've listed a question here, and you should see it on your poll everywhere. If you go to the, I think Tanvi has added it in the chat, or you can just go directly to bit.ly/FIF-2022 and add your responses to this question. What policy questions would you be most interested in using mystery shopping to answer? So as an example, what I'll do is talk about what we have done for the transaction cost index and what our answer is to this question. And then it'll be very interesting to hear your responses to this question, imagining that, if you were to carry out a mystery shopping visit, if this seems like something that could be interesting to you and to the organizations that you work for, what policy questions might you use mystery shopping to help answer? So our study, the transaction cost index, we are very much interested in understanding the true costs of mobile money, of using mobile money, including both the unofficial fees and non-monetary costs. It's possible that you would be interested in not necessarily cost, but other barriers to uptake, issues around the sign up, the onboarding process, what sort of documentation, ID requirements there are, for example. But our focus is really on the transactions themselves and the costs of carrying out those transactions. And then, as I mentioned before, we're interested in discrimination. I talked about discrimination by gender and by relationship to the consumer, and then consumer protection issues related to pricing transparency, other agent misconduct, including security issues and harassment. So I'll give everyone a few minutes to reflect on this question and enter your responses into Poll Everywhere, and I'll try to display responses. And I should have mentioned, I think people are doing this already, but please feel free to vote on others. If you see an idea that intrigues you or that you were going to write already, you can just upvote that, and those should come to the top. So as people are entering, I see a few trends here already. So I'll just note those. I think gender is coming up as the most voted issue here that our audience members are interested in. Costs by gender. I also see gender discrimination has a few votes. So maybe I might ask if this is possible, and maybe Tanvi, you can assist. But whoever wrote the comment on costs by gender, if you would be willing, if you're able to unmute and maybe talk a little bit more about why gender is gender discrimination is something that you and your organization are interested in, and why you think mystery shopping might help identify those areas of discrimination.
So Willie, I actually put that response in because I wanted to get people started. But there are so many other people that listed gender on here. And so I think that there's an option on your end to request video or microphone access. And so if someone else who's written something about gender, like for example, is the agent helpful to particular genders over others? If you left that comment, perhaps you can send in a request and I can give you access to unmute. Okay, how about someone who wrote about DFS adoption by age? So there's a few comments in here about, are youths more likely to adopt? Is there any gender, or is there any digital literacy and segregation by age? Are you able to request microphone access? Okay, maybe we're having a little bit of difficulties with the interactive component of this. So if folks have thoughts that they want to drop in the chat, please drop them in and we'll read them out loud. But Willie, maybe you can comment a little bit about how you're thinking about considering gender and age and those other questions in your design.
Excellent, thanks Tanvi. Yeah, so I mean, gender is a key component to our work. I think we're quite interested in in understanding if costs do differ by gender. And there's evidence from other studies, and I'll save that discussion for Javi, because I think he's going to talk about this. But there are, there is evidence from other work that this should be a concern. And so our design, essentially what we do is we send mystery shoppers that are otherwise identical and ask them to complete identical transactions with the same agent, and only modify the gender of the mystery shopper. And so by doing that, you can quite precisely sort of isolate any gender discrimination by the agent. And so, this is something that we're quite interested in, and we know that mystery shopping is really the best way of getting at this directly. In consumer surveys that we've done in other contexts, we've seen, we've asked about things like agent misconduct and agent overcharging, and we've gotten some, somewhat unexpected results where, at times at least, women are reporting less misconduct than men. But it's not totally clear what's driving this. It could be, in fact, that for whatever reason, men are experiencing worse overcharging than women, but it could also be a reporting issue where either women are just using digital financial services less, and so they're less likely to experience this overcharging, or they are not aware of the overcharging, or even they don't have really have the agency to feel like it's worthwhile to report to our own enumerators that overcharging is significant. And so there's all of these questions that sort of potentially could bias results of survey results that explore this issue. And so our understanding is that mystery shopping is really the most direct and precise way of understanding gender discrimination. Please.
May I jump in here? So actually, in a country like Bangladesh, I mean, there's, speaking of gender issues, there's the concern that well, I mean, so one of the facts is that there's less participation in mobile money markets among females than males. And one of the reasons why that's the case is because, women might feel uncomfortable dealing with agents. In Bangladesh, basically, we know that, most every agent is male. And so, for a lot of these transactions, you have to hand over the phone, and basically there's anecdotal evidence reporting that women sort of get unwanted messages and so on. And so this concern basically is also something that we would like to capture as we do these as we measure the cost of doing business and engaging in digital transactions, right? So it's yes, the price is one, but also how secure the person felt doing the transaction, were there any untoward advances, and so on and so forth. So all of that we hopefully will be able to capture. And specifically in the case of Bangladesh, actually we're involved. IPA is also involved in a separate study where we try to convince, where basically we're subsidizing the wages for an additional employee in some of the established agents, and basically we're randomizing the gender of these new employee, right? And so in some places, agents will get a subsidy to hire a female, in other places to hire a male, and so we can see how an additional employee. So basically, the establishment, if you will, of a female agent will can change the attitudes towards using mobile money services, as well as basically hiring maybe that's something that other agents might want to do in nearby markets. Sorry, thanks.
That's great. Thank you. I think just because we are low on time, I will continue to the next question. So you should now see on Pulled Everywhere this next question on selecting products, channels, and scenarios. So once you have a policy question, a policy objective in mind for a mystery shopping study, then you have to really decide on what products, what delivery channels, and scenarios should the mystery shopping focus on. And this really just depends on what policy interests you have, what areas, what types of products, what delivery channels you think there may be concerns about that you want to explore through mystery shopping. So again, our study, just as an example, was really focused primarily on mobile money. We are including some comparison with agent banking, as well as traditional bank branch, the experience of consumers at bank branches. But mobile money dominates in the markets that we are beginning our work on, and so we're focused on the experience of consumers using mobile money at this point. As I mentioned before, the channel that we're mostly focused on is agent-initiated transactions, because agents are, number one, the most common way that consumers sort of interface with their mobile money accounts, and it's with these agents where consumer protection and overcharging issues are most common. And so this is the area that we wanted to focus on. The scenarios that we focused on are just basically the most common scenarios that people are, the most common transactions that people are engaging with agents. So that's cashing in and cashing out, and agent-initiated transactions, including over-the-counter transactions where cash is given to an agent, and we're asking that agent to send that cash to someone else, to someone else's account. So the TCI was focused on that. So I'm excited to see what you all might be interested in focusing on. So I see, in terms of the channel, sending money to and receiving money from overseas. Okay, yeah, very interesting. And government social assistance. Scenario is, right, got it. Scenario, sending and receiving money from overseas. So yeah, this is very interesting. And in fact, just one quick comment on that, the transaction cost index is in some way modeled on a similar initiative that's housed at the World Bank that measures the cost of international remittances. And so there is, I'm trying to remember the name of it, Javi may know, but there is an index that exists already that measures the true cost, or at least the official cost of international remittances, though there could be more to be done to explore the potential overcharging in that area. Government social assistance, I guess this is referring to social assistance payments made over mobile money channels. This is definitely something of interest as well by IPA. IPA has done work exploring issues around social assistance payments through mobile money in the past, and has certainly found that issues around overcharging or agent misconduct are quite prevalent. So definitely can understand that as well. Interesting to hear about, wage payments for as a scenario similar to government assistance programs, payments made via DFS for health services, government services, etc. versus cash. I'm not sure what RMG factories is. I apologize.
This is ready-made garment factories. So these are factory workers, typically females, that some they're now starting to get paid not in cash, but actually with the wages directly deposited, and then they can typically they transfer money to their families back back in the village and so on.
Excellent. Thank you for that, Javi. So overall, it seems like a lot of interest in government payments, wage payments. So this is quite interesting. Just for the sake of time, I think I will move to the last question, which should now show up as well. So once you have your policy objectives in mind and the types of scenarios you want to run, what channels, what providers you're going to use, what transactions or what scenarios you're going to run, you need to think about consumer profiles. And here we talk about actual traits of your consumers and assumed traits. So you can design your consumer profiles, your mystery shoppers, based on actual traits, which means the true traits of the mystery shoppers that you are using. So these are things like gender or age, that are visible traits, that are difficult to sort of to modify, versus assumed traits. These are essentially asking your mystery shoppers to act in a certain way. So these can be things like their level of financial sophistication. So by creating mystery shopping scenario scripts that imply either high or low level of financial literacy, you can measure differences in the experience of high, sophisticated, high financial literacy consumers versus lower financial literacy consumers. Things like, assumed socioeconomic status based on the way that consumers are dressing or speaking. So you can make some modifications based on how the consumers are acting beyond their actual physical traits. So again, our focus, we really only varied the actual traits. We in this particular study are not focused on assumed traits on acting. So we basically focus on the gender of the shopper. So we're ensuring that our mystery shopping visits are a mix of visits by female and male mystery shoppers, and the relationship between the shopper and the agent. We're interested in any differences between the experience of new customers versus regular customers. So then, this is again an actual trait. And finally, geography, urban versus rural. So as I said, no assumed traits in the TCI study. So I see from the audience things like accents, yes, and even you can imagine language, ethnicity. This is definitely something that could be of interest. Exploring any discrimination that goes along with that. How do agents react differently to people who don't conform to traditional gender roles or non-binary gender, visibly so? Yes, this is a natural extension to our very binary gender analysis that we're focused on. Going alone or being accompanied with someone else. This could be quite interesting, particularly for those with lower financial literacy themselves. Does having a second person reduce the rate of, for example, overcharging? Oops. How do agents react differently based on observable class, for example, through clothes? Yes, exactly. This is something that I mentioned as well. Do you look at differences by unobservable characteristics like education level? So this is not something that we have focused on for our study, but it's definitely something that you could look at. And this, I think this relates to the assumed traits. You can sort of act in a way that implies higher or lower education or literacy, users standing in the community. yeah, similar. Xavier or Tanvi, any comments on this beyond what I've said?
Actually, I'll describe now a couple of papers that do vary the the sort of the experience of the consumer, and also the appearance, but so I guess it's coming up.
Perfect.
Yeah.
Well, this is a great segue. Please take it from here.
All right. What I want to do in the next minutes is describe three papers that actually use mystery shopping to understand various aspects of financial transactions, right? So this first paper that was done a while ago actually tries to understand the quality of information and the quality of the products that are being offered to regular consumers. And again, it's important to stress that we use mystery shopping because what we want to understand is again the information that's being provided and the quality of service that's being provided to a regular consumer, right? So I mean, if somebody from the regulator comes in, with well dressed and basically says, I want to know, how you treat consumers, then of course it's going to be, the experience is going to be very different, right, from that of a regular consumer. So that's why it's important to do, when doing these audit studies, that you're capturing a transaction as it would happen in real life, right? So this first study, was done in Ghana, Mexico, and Peru. I mean, these are actually countries that were selected because they have the law, the consumer protection law on paper is very different, but actually, as we will see, the response of the staff of financial institutions was very, very similar, right? And the upshot. So again, we wanted to understand the information that was being provided. So we trained these shoppers that were selected from different markets. I mean, rural and urban and peri-urban areas. Again, once you select a market, you sort of do a census, and you do a census of all the providers in that area, and then you visit all of them, right? I mean, and that's actually something, the same approach that we want to use for the project on the TCI that really just explained, right? And so, as you send these guys, you train them to collect data. I mean, our shoppers were interested in either credit or savings products. And so they had, they were training two levels of sophistication, right? So some people basically said, look, I just want a loan, or I'm interested, I have this money that I want to save, and then let basically the staff just explain what the products were and so on. The other one, and this is the regular or unsophisticated individual, the sophisticated guy basically asked, let the staff talk, but also if the staff was not forthcoming in providing certain information, like the interest rates or certain fees, then the guy would ask. Okay, so again, the level of sophistication has to do with what kind of questions you actually ask if the information is not being provided, right? But by and large, basically what we find is that there's very little information that's being disclosed voluntarily. Okay, so information about the cost of the product is only provided insofar as it's being asked. Okay, and so that actually suggests that when we think about comparison shopping, if you do comparison shopping based on the information that the staff provides, because that information is only 30% of the total cost of information, right? If you use that information to make decisions and to choose across different products, you may end up, in fact, we show that typically you don't find, you don't end up with the cheapest product, right? Because a lot of the information is not being provided, right? And so consumer, comparison shopping makes sense when you have the full information, right? But and so that might explain why there's little comparison shopping, because partly people don't necessarily get the full information, okay? But also again we found that because they asked more information, experienced auditors ended up with more information, and also they of course were able to choose they were able to choose the better, the cheaper product, right? So related to the questions that we saw, the variations that you could do with this mystery shopping, with this audit, with the shoppers. So we found in all countries that actually dress code did not make a difference, and gender actually did not make a difference either. What was really important for us was this experience, right? The level of engagement, if you will, during the visit. Now that doesn't mean that gender is not important, and of course, in a country like Bangladesh, might be very, very, very important. I think we should move to the next paper. Okay, so all right, so this is actually a paper that's actually very interesting, because actually, well, for one, it took place in Bangladesh among factory workers. And actually, this is a paper that actually has a very positive message. Okay, so the idea here is to compare individuals that these are all factory workers. Some of them got their wages directly deposited into accounts that were open for them. These were either bank accounts or mobile money accounts, and others still received the wages in cash. And a subgroup also got an account open. Okay, so you have people with accounts open, some still receiving the money, the wage in cash, others directly deposited into their account. Now, the fact that the wages were directly deposited into the account basically made people actually use these accounts. Okay, so you see that there's more transactions. And there's more, so they learn more about these accounts. They also started to transact outside. So in all these factories, there was an agent nearby that was ready to help the worker. But you start to see transactions outside. They do different transactions, and they also do transactions on their own outside the factory. Okay, so there's more knowledge. Okay. And so as these individuals learn about how to use these accounts, then they rely less and less on agents. Okay, and as they rely, so basically before, in order to do a transfer to another phone, they had to they went to the agent and did and used relied on the agent to do this transaction. Okay, now the agent would charge money for that, even though that's they shouldn't charge anything, but because they were providing some service, they charge, right? And for other transactions, they actually overcharged. Okay, now insofar as these people were able to do that on their own, because you can do a transaction just using your cell phone, of course they were saving on these transactions to the order of 5 to 6%, but also, and this is what's more interesting also is that in places where there's a high so in places close to these factories where most workers were started to receive the wages via direct deposit, right? What you find is that agents near these factories actually charge less for any sort of transaction, whether these guys were experienced or also non-experienced individuals, right? So there's some sort of there's an indirect benefit from people that actually might not have been, might not have been very sophisticated, or had little knowledge of the factory, but just by living close to a place where the average consumer was informed, they would also benefit, because agents tended to charge less overall, right? And so again, so I guess the positive message here is that instead of providing financial literacy directly, just opening accounts and making people use the accounts and nudging people to use the account through direct deposit, for example, or through government transfers directly deposited into these accounts, right? By encouraging people to use the accounts, people learn how to use these accounts, and they make better decisions, right? And that again as well leads to less overcharging in agents that are in these places where people are more educated and know how to use these accounts. And finally, so sorry, we can move to the last paper. So this is actually a paper, also a couple of very nice studies in Ghana, where they actually, they take seriously this, the gender, the role of gender, both as an agent as well as the consumer. So in Ghana, basically, unlike Bangladesh, in Ghana there's quite a few agents that are female. Female-owned businesses are pretty extensive, and so they can do these sort of 2x2, if you will, right? So what happens when a male customer faces a female agent or faces a male agent, and vice versa? What happens when a female customer faces a male agent or a female agent? Okay. And actually, what's interesting actually is that female agents treat female customers the worst. I think so I think Francis, who's the author of the study, and also a co-author of us in this TCI project, is exploring this. But basically, we find that female agents. He finds that female agents overcharge female customers, and they charge male customers the least. Maybe because, again, related to the previous paper, maybe they think that females are maybe less knowledgeable about transactions, right? But anyway, this is all stuff that he's addressing. Again, male agents serving female customers also charge more than male agents charging male customers, right? So this is all relative to male agents serving male customers. Now what he tried as well in these markets where he sent all these individuals, these 130 markets, is he tried a couple of campaigns. I want to focus on these information campaign where they announced, they told customers about the fees that they should be charged. Okay, and just this announcement made actually reduce substantially the overcharging that it was seeing in these markets by up to 40%. Okay, so this is a case, unlike the previous paper where we saw that just getting people accounts and learning by doing leads to a good equilibrium where leads to to curbing overcharging. Also providing information does lead to curbing overcharging. And I think with that, I'll leave it at that. Thanks.
Thank you so much, Xavi, and thank you so much, Willie, for your presentation. So unfortunately, we're out of time, so we won't be able to take any more questions. But our emails are on this slide, and so if you have any questions for us or comments that you'd like to follow up with, just feel free to reach out to us. So thank you all for your participation, and I hope you have a good rest of the day and enjoy the rest of the conference.
Thank you.